Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for August the 24th, 2010. Now, before we get into our first position for tonight, I'm going to do a quick review of the US dollar index before we get into our currency pair, because we're going to be doing a currency trade tonight and we're going to be doing a position on crude oil, both of which are somewhat counter to the existing trend that appears to be in place. But we want to explain what's happening here. Now you can see that I have this line drawn here at just above the 83.50 level on the US dollar index. We've closed at 83.22. We've hit a high today of 83.75, but again the market continues to back away from this area. Now we also have a line drawn down here just above the 80. Now what I want to point out is the triple EMA cross has made a move to the upside. However, not a very strong move. We seem to be bottoming out between 82.50 and 83.50. Now let me tell you what I think is actually potentially going on here. Now what we're going to do is we're going to back this out 6 months to have a closer look so everybody can see what's actually happened. Now back here in the end of March, middle of April, we can see how the triple EMA crossed to the downside, only to be followed by a vicious move to the upside. So a classic false break in an uptrend, a very strong uptrend that lasted from essentially October 2009 all the way to this 89 level that we hit in the beginning of June, and that's when we started putting out the sell signals on the US dollar index. Now, good thing to point out, we can see that the exact same thing is happening here. The market's gone all the way up, it's come back down. We've got a small cross here on this triple EMA cross, period of consolidation, much like what we had here, and then the market made the cross but then very quickly reversed. So again, is this the only time that this has taken place on the US dollar index? Well, what we're going to do is we're going to go back another 3 months and see if we can see a pattern. Well, when we look at this closer, we can see a very clear pattern. The triple EMA crossover took place also here in January to the downside, only followed by a very strong move up. Happened again here at the end of March. We can see that it happened back here again towards the beginning of December and the end of November. So the initial move was not exactly what we thought it was. So this is what I want to point out here, that in this particular case, there's a better than 50% chance that the US dollar index is giving us a false signal here in a very thin, low volume market that is basically just consolidating. So does this thing have room to push higher? Based on what we've just looked at and these periods of consolidation, my opinion is that the US dollar index is probably going to be very limited in how much further it can move up, and this is very possible that this is nothing more than a correction in the new downtrend, much like what we saw in that uptrend. So in that uptrend, we've seen on several different occasions the US dollar index put off a false sell signal only for the market to turn around and reverse and go considerably higher. Now with that said, we're going to take this into consideration and we're going to look at two positions for tomorrow that are definitely higher risk and somewhat counter trend. Now the first one we're going to be looking at is this British pound US dollar. We can see that it's getting a lot of resistance in this 154.60, 155 area. We've had a weak close at 155.13, but can we exploit this and use a move lower to get into long positions? Well, I think we actually can, and there's a number of indicators here that suggest to me that the short on British pound US dollar may not be what it looks to be. So we can see the predicted medium-term difference is turning positive. The predicted long-term difference is flat. The predicted stochastics in heavily oversold territory. Predicted true strength indicator somewhat flat, so we're going to leave that one alone. But we're going to be looking at this resistance. So let's now go into the daily report on the British pound US dollar and see exactly what's happening for the range for tomorrow. Now, again, it follows the US dollar index very closely. Not surprisingly, the Neural index is down 155.70, 154.32. Predicted short, medium, and long-term differences are, again, all negative. But we can see how this medium-term difference is starting to actually turn the other way. It's not continuing to strengthen. We could see that in the chart. So for tomorrow, 154.32, 154.40 area, we're going to be looking to get into currently counter trend longs, but whether it's actually a counter trend is arguable, because in my opinion we're still moving in an uptrend and this is a corrective move. So we'll see how this plays out. Now I want to point out to everybody, it is counter trend, it is going to be volatile. We may see a few more days of US dollar strength, but based on the analysis looking at the US dollar index in those past price patterns going back almost a year, we can see that it's a better than 50% chance we're in a corrective move and the US dollar may have run its course. Now, if we're correct in that, we're also going to say, well, there's a very good possibility then, if that's accurate, that light sweet, the crude contracts, are actually going to follow this. So when that US dollar index sells back off, crude oil is likely going to move higher. We can see that I have this line drawn right off this 71.90 area. Now we've closed the day at 73.10. We've got the predicted stochastics in heavily oversold territory, the predicted true strength indicator just hitting the oversold levels now. Predicted medium-term difference we can see is in heavily oversold territory and has already moved back up and crossed the predicted long-term difference. The predicted long-term difference is running flat at -3, which is grossly oversold. So with that said, let's go into the daily report, just like what we did on British pound US dollar, and see if we can identify a decent entry point for tomorrow. So looking at this, we can see we have 74.33 as the high, 72.52 is the low. Now again, August, very thin trading conditions. 72.52 is going to be our target. Our stop here we're going to have at about 70.50 is where I would put the stop on this, and we're actually going to be looking potentially for a bigger move than 74 by the week's end, if that's which I think may be possible. Now again, we can identify the top of the current range sits at just above 82, so for now we can say we're trading essentially a 71.50 to 82.50 range. So again, we're going to have our stop below this line that I have drawn across here, and we'll be looking for a minimum of $2 to $3 move to the upside on those crude contracts. So those are the market positions for August the 24th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.